Hey, what's going on, everybody? Welcome back. If you have not subscribed to the channel yet, please make sure you hit that subscribe button, like, and share this video so we can all build generational wealth together. Somebody asked me the other day, what percentage of your portfolio should be in stocks? What percentage of your portfolio should be in bonds? And I've heard people talk about the 60-40 portfolio, which is 60% stocks or 40% bonds. But I don't follow any asset allocation model. I stopped doing that years ago when I listened to Warren Buffett.
Position of X percent. And frankly, I think these asset allocation things that tacticians in Wall Street put out, about 60% stocks and 30%, we think that's total nonsense. So we want to have all our money working in decent businesses.
Yeah, we think the best way to minimize risk is to think. And the idea that you have, you say, I've got 60% in stocks and 40% in bonds, and then have a big announcement, now we're moving it to 65-35 as some strategists or whatever they call them in Wall Street do. I mean, that has to be pure nonsense. I mean, 60-40 or 65-30, it just doesn't make any sense. Much of what you see when you talk about asset allocation or something, it's just merchandising. It's a way to make you think that if you don't know how to determine whether it should be 60-40 or 65-35, that you need these people. And you don't need them at all in investing. I mean, most of the professionals that tell you you're going to get in great trouble unless you listen to them and adopt and sign up for their services, they're good at selling, but
You heard him, Warren Buffett, say that he want to have all his money working in decent businesses. I have that same philosophy. I haven't owned a bond for pretty much a decade. You see these other examples that say you take 100 minus your age, and that's what percentage you're supposed to be in bonds. I'm 51 years old. For the last 9 years, I've averaged 25% rate of return. There's absolutely no way in the universe that I would have averaged that rate of return if 50% of my portfolio was in bonds. It just wouldn't happen. So, and I also learned from Peter Lynch when he said that investing in bonds, money markets, and CDs is investing in debt, for which one is paid interest. So why would I want to invest in debt when I can buy ownership in a wonderful business? And for me, every dollar I invest, I'm investing for 10 years from now. I live by the Warren Buffett philosophy that says that if you're not willing to own a stock for 10 years, then you shouldn't own it for 10 minutes. I'm not investing for 2026. People say, well, I'm looking for this stock based upon what's going on in Venezuela. I don't know what stocks are good for that or not, but I'm looking at a business and say, can I own this business for a decade? Now that I've owned Amazon for roughly 10 years, I've owned Apple roughly 10 years, I've owned Google and MasterCard roughly 9 years. I look at the quality of the business, and when I'm buying into a business, I'm looking at, can I own this business for a decade? Can it compound for a decade, and can it continue to build the wealth that I want to build for my family? And I'm not trying to jump around this whole asset allocation models that people follow and what age your age and risk tolerance based upon you should be bonds. I don't see myself selling out of my great businesses anytime soon, whether I'm 55 or 60 or 65. Wealthy people continue to own their businesses up until their night. Warren Buffett just retired from running Berkshire Hathaway, and he's owned his Berkshire Hathaway stock for the last 60 years. So he's 95 years old. He still owns his Berkshire Hathaway stock. So the idea that I'm going to turn 60 because I'm afraid of a stock market crash, and when I've been through different scenarios and my portfolio has been down 20% multiple times, it's been down 30%. Individual companies that I've owned have been down 30%, 40%, 50%. Through all of that, I still average 25% rate of return. So if you take the lows and along with the highs, and you own good businesses, that's the key. You have to own good businesses, and you're going to let them compound. And you can add to your holdings over time. You're not required to buy a stock once and never buy any more shares again. You can continue to add to your holdings. So as far as me, I only own individual businesses. You have some people who invest in real estate. They invest in real estate because they're going to own that real estate for 20, 30, 40, 50 years. It's the same way for me when I'm buying into a business. I'm buying that business to own 10, 20, 30, 40, 50 years. And if I'm right, all I got to do is be right about one or two businesses in my lifetime and just own it for 20 years. Go back and look if you'd own Amazon and Apple for the last 20 years. I've already owned them for a decade. They're still compounding at 20% a year. Broadcom and Nvidia I've owned for almost going on 6 years now. I don't plan on selling those anytime soon. Those are by far my best two businesses in terms of growth. So the idea that I'm going to get 60 and be like, well, I need to sell these and go to bonds, it just doesn't make sense to me. So I only do what makes sense based upon my own research, not what anybody else says I should do, because according to them, there's no way I should be averaging the rate of return that I'm averaging anyway. So listen, you have to make up your own mind. You have to determine what's best. Don't just take somebody's what somebody says just based upon their quote unquote expertise because they work in a certain profession. You have to look and learn and do your research because it is your money. It is your money. It's so important that you learn how to invest your own money and you get rid of all these fees that you're paying and these poor results that you're getting. You're paying 1% of your portfolio for results that you can get by yourself without having to pay all these extra fees. So the short answer to the question, I don't have any idea because I don't do it. I don't follow any asset allocation model. I just look to own great businesses. And if you own great businesses, the compounding, the growth, everything takes care of itself if you learn to identify and own great businesses. That's what I look to do, and that's what I think all investors should look to try and do. Don't look for the hot stock. Don't look for what stock is going to pop because of what happened in Venezuela. Look for the great business. Own the great business, and you can sleep well at night because you don't have to worry about, I need to sell it in June when the price goes up. No, you're going to own it to June. You're going to own it in June 3036. And then you can sell some shares if you need some cash or whatever. So anyway, look to own great businesses. Decide for yourself, study, research, and go from there. All right, talk to you soon.